Target professional.
Target, I'm back.
That's good. First time in history, Target, we are alive. Yeah. Oh, wow. Wow. All right, too. All right, too. All right, too. All right, too. This is live session. Now, all right, so let's continue. Of this is charge the live. Lisa Marking. Let's continue. I never knew
Okay.
that they've connected Facebook Live, YouTube Live, everything is here more.
Wow.
I can do live stream from here. And that one is to be good. All right, so let me start the recording. All right, so now we are back again. Today we'll be doing the accounting principles. But before we start that, I think there's a explanation to debit and credit. So imagine we have registered a company called Target Agro World. Target Agro World Limited. It's a company.
Okay.
Give me a transaction. We buy and sell. We buy and sell packaged, boxed, and export exotic coconuts.
Okay.
So now, give us a transaction, any transaction at all, so that we see the debit and credits. Who is receiving, who is giving.
Okay.
So
Buying.
let us do that. We bought a vehicle, right?
Yes.
So we bought office vehicle, bought office vehicle. Did we pay or is on credit?
You pay.
Okay. Paid with or paid with cash. By cash.
Mm-hmm.
How much is the vehicle? So they asked the price of vehicle from Kumasi. It's 80,000 cedis. A delivery van.
Okay.
Wanted to acquire one. They say 80,000 cedis for a van. Good. So this let us know I bought it. Pay with cash or bank. So now tell me, in our account, and this is how our T account is like this. T account. First, the title should come. The name of the account. So if I'm doing vehicle, this is the debit side. Anything I record here is called debit. I've debited it to the account. This should be the title of the T account. This should be the credits. Debit and credits. Now, there are two items here in question. Target, there's a vehicle here and there's a cash. Which one are we receiving? Which one are we giving?
You said there's a what?
There
we
is
we are giving out the cash.
Thank you. And we are receiving
The vehicle.
so always debit whatever you are receiving. So they say debit the receiver. Whatever you are receiving, you debit that account.
So the car account.
Thank you. And credit the giver. Whatever you are giving out, credit it.
That's the cash account.
That's all. So you debit vehicle. So you open vehicle account like this. Vehicle. vehicle account nicely like this. Then record it here, right here, cash. 80,000. So this regular account, we have debited it.
Yeah, debited it. Okay. I get it now.
Now the T account is fading out. So now because of tally, so I can just write I can just write it instead of me doing vehicle account debit 111. I can just write put debit here, put credit here. Like the way bank statement they do it.
Mm.
And write here vehicle purchases and put it 80,000 debits. That's all.
Yeah.
Good. So the meaning I've debited it. Then you credit cash.
Cash.
So in cash accounts, you print cash account nicely. Then right here, vehicle 80,000. That's all. Now you see that in this transaction is very easy for you to determine what actually you are receiving and what actually you are giving out, right?
Yes.
Now there are certain transactions you find it very difficult to know what you are receiving and what you are giving out. You get it?
Mm-hmm.
So how do you do that? So let me give you a practical example. Now, if I owe someone and we pay the supplier. Paid a supplier. This one is even easy. 90,000 by check. Good. This one is easy. Let me give you a very difficult one. Cash sales banked. Or it's not done. That's cash sales banked. I hope cash sales, whatever
Yeah.
we have banked it. Now, first question. My first question is that if I sell goods and I receive fiscal cash and I send the money to the bank, can you tell me who is the receiver here and who is the giver here?
If you sell goods,
Uh-huh.
you get the cash.
Yes.
You take the cash to the bank.
Yes, I take the cash to the bank. I want to see who finally. Or let me even I sell goods and I get cash.
Mm-hmm.
When I sell goods and then I get cash,
Mm-hmm.
who is receiving and who is giving out? What is receiving and what is giving out?
The goods are given out, the cash is received.
Good. So you debit which one?
You debit the cash.
Then you credit goods, right?
Yes, you credit good.
Good. Then you credit sales.
Still.
Now, what if I take money from our cash and deposit at the bank?
If you take money,
Yes, and deposit at the bank.
you credit, you debit cash.
I took cash from our money and go and then deposit at the bank.
So you credit cash,
Correct. And debit what? Bank, right?
debit bank.
Okay. What if I started a business with a vehicle, or I started a business with a cash of 1,000 Ghana? I started a business with cash of 1,000 Ghana.
You started a business
Yes, please.
with a cash of 1,000.
Yes, please.
Debit cash.
Then you credit what?
Coming. So you I'm confused.
So you see that sometimes you find it difficult to identify who is giving what you are giving, what you are receiving, right? So here, capital is given. Once you start a business with it's a capital. Owner's contributions are capital. So here you credit capital and debit cash. You are right by saying you debit cash. Now let me introduce you to the second rule. The second rule says that for every debit entry, there must be a corresponding credit entry. So
Yes.
if you know one side correct, the opposite is true for the other.
Yes.
What you've learned now is called the rules of double entry. This is what Luca Pacioli brought, and now he is the father of accounting.
Okay.
But that's not what we are about to do in FR. Financial reporting goes beyond just recording things, debiting and crediting our books. Financial reporting, after you've done all your debit and credits, and you have your account available like this, then you balance all your accounts and take these balances up to the next level. That is the financial statement preparation.
Okay.
So that is it. Now, there's also rules or principles that you should be guided in preparing your financial statement. You see, there are rules guiding the recording. That is what you've just learned. And then there are rules guiding the preparation of the financial statements. Have you gotten the two?
You said
There are rules governing the recording, and then there are rules governing the financial statement reporting.
Yeah.
Good. So this is what you have to focus on. The rules for preparing what? The rules for preparing
Financial statement.
financial statements. That's correct. And that one is what we call the conceptual framework.
Oh, okay.
The conceptual framework of financial reporting is all about principles, concepts. It refers to interrelated. What's the meaning of the word interrelated? When you say something is interrelated.
Interrelated.
Yes, please.
There's a connection between
Connection.
a number of
Mhm.
things, two or more things.
Okay, so interrelated principles,
Okay.
concepts, assumptions. Basis that form the basis of preparing financial statement. Did you understand? You don't understand.
Yes, I do.
So they are interrelated principles, meaning that the principle doesn't conflict themselves. Do you get it?
Yes.
They don't say at one principle, whatever one principle say, the other one disagree. No. In fact, what it does is that wherever one principle and the other one continue, you get it.
Okay.
So it's like a foundational principle.
Yeah.
Good. So these are the concepts. I call it the do's and don'ts in financial reporting.
Please hold on. I'm coming. No, I'm having a class. I'm having a class. Oh, I can't eat. The time. Mm. Mm. I can't eat. I'm having a class. CIB class. Yeah. Hello. Sorry, it was my mom. Hello.
Okay. Yes, please.
Sorry, my mom was talking to me.
Oh, no problem at all. No problem at all. Okay, so now, I refer to the conceptual framework as the do's and what? The don't in FR. You agree?
Okay, I agree.
In FR.
I agree.
And I also say that if you go to any town new, you travel outside Ghana or any community, anytime you change your environment, please. When they give you water, don't drink cool. When they give you food, don't eat. Until you know their principles.
Yes.
You know their concept, because they'll give you food to eat. When you finish eating, you'll be laughing and it will be against their taboo. No, you'll be arrested. So this is like real life. I always say financial reporting is not a normal subject. It's a lifestyle. Because if you want to understand every community very well, know their principle, what they believe in, their assumptions, their thoughts, what founded them. For example, why is that every Asante Hene supposed not to watch River Pra? Even if they are passing on River Pra, they're supposed to tie their head so that their eye doesn't see River Pra. Why? A principle, there's a concept behind, because one of the kings in the olden days were crossing River Pra. By the time they go to the end, the king's head was not part of his body.
Oh.
Yes. So it's a taboo for any Ashanti king, any Otunfo or Setutu Prempe, whosoever, to watch River Pra, because, and surprisingly, the head, they searched for the head, they couldn't find the head.
Wow.
So it has become a taboo principle. So if you don't know these concepts, and maybe you let Ashanti Kingdom to go and pass through River Pra, and they are doing, when they get there and they are doing their culture, you won't be able to understand the basis.
Yeah.
So it's good for you to understand what shape the community, what shape financial reporting. the concept behind FR. So this, if you fail to understand, if you meet anybody who doesn't understand FR, the problem is not anything, it's this here. Because they don't understand the concept. They don't understand the basis than for them to what? Apply it. You get it?
Yes.
Good.
Mhm.
Now, this conceptual framework has an owner. Who is the owner? We call them International Accounting Standard Board. IASB. Yeah, the board, they own the conceptual framework. So we normally give a reference. We reference them that IASB's conceptual framework. IASB's conceptual framework. So, and for this board, their sole aim is to produce IFRSs, the accounting standard. I don't know if you have come across that.
Yes.
So the question is that how is the conceptual framework different from the accounting concept, the accounting standard?
Yes. I was going to ask.
All of them are principles, but they are different. One, the conceptual framework I refer to like the grammar in the house.
Is that the conceptual framework?
I refer to it as the grammar in the house.
Okay.
And then the IFRSs are the main principles. So
Okay.
the conceptual framework, the difference is very simple. The conceptual framework is general, it provides general principles, right? Whilst the IFRS provides specific principles, that's all. So which one do you think it will be many in town?
The IFRS will be many
Why?
because it provides different specific principles.
Thank you. So every specific transaction in accounting requires a specific IFRS. So mention anything you know in accounting, there's a specific standard that governs it. You get it?
Yes.
But this conceptual framework is general. It can be applied anywhere, everywhere.
Okay.
So that's one funny thing about the conceptual framework. Now, I can also refer the conceptual framework as they are like lawyers who articulated the the 1992 Constitution of Ghana. One of them that I happen to be met before is Lawyer Tatushi Kata.
Okay.
They are part of those who articulated the 1992 Constitution. So let me ask you, after articulating the Constitution and then the lawyers who articulated the Constitution, who supersede the other?
Who should what?
Who supersede the other?
Can you repeat that question?
Okay, so the lawyers who designed, who articulated the 1992 Constitution, and then the Constitution itself, who supersede the other? So when there's a confliction, which version overrule the other?
The Constitution.
Not the producers.
No, the Constitution.
But it's not I can't language that yeah in chap one man is here. Oh, this one there.
I still believe it's the Constitution
Why?
because the Constitution has become a legal document.
And the lawyers are also legal. Or legal. as the constitution takes the legal mandate of lawyers from them?
No.
After every constitution, the lawyers still maintain their legal status, right? I know where you're heading towards. There's an Article 2 of the 1992 Constitution suggests that the supremacy of the Constitution. He
Mhm.
said this Constitution shall be the highest law of the land,
Yes.
and any other laws or provisions, any enactment shall be consistent. In the event where they are inconsistent, to the degree of inconsistency shall be what? Void.
Yes.
So all what he said, you are right.
Yeah.
Constitution supersedes the lawyers. Why? Because now the constitution becomes a national asset, becomes a national law. So the lawyers, they still maintain their legal status. However, now their product becomes a law binding everyone.
Mhm.
So the constitution supersedes. Even though we use the lawyers' ideas to build a constitution, but after building, at least now they say they are doing constitutional review, right?
Yeah. Yeah.
Yeah, so you see, when they finish, those that did the review brought a new app, did something from it. Who will supersede the other? It's a constitution, right?
Mhm.
Good. So now let me bring it back to this IFRS, a conceptual framework. Even though they use the general principle, that's the IFRS, to develop the specific principle, which is the IFRS. Let me take the name.
No, so I think you made a mistake. You're saying even though they use the
Even though
IASB,
no, even though they use the conceptual framework.
the concept, you initially you said that
Oh, yeah,
IFRS.
sorry. Even though they use the general principles to develop the specific principles,
Mm-hmm.
the requirement of the specific principles override the requirement of the general principles. Do you agree?
I agree.
They use the conceptual framework to develop any of the IFRSs. However, the requirement of the IFRS supersede which one? The conceptual framework.
The general
Why?
principle. Can you
Why?
tell me why? Please tell me why.
Oh, but you say you agree.
Mm-hmm. Mm-hmm.
Okay, let me tell you the reason. The reason is this: between CEO of a bank
Yeah,
and a branch manager who can tell more issues about the transaction.
the bank manager.
Thank you. So whatever branch manager says, that's what the CEO have to accept.
Yeah.
But the branch manager is acting on the instructions of the CEO, true of us, the MD.
Ew.
Good. So what happened is that the IFRS is more specific, it's more pertaining to the situation.
Mm-hmm.
So it provides a more appropriate and realistic solution, much more than the general principle.
Mm, yeah.
It's like normal greetings. Oh, how are you? You are fine. Okay, then we all move on. How are you? You are fine. We all move on. That's general.
Yeah.
But a family member can go, okay, specific. Last time he said, your leg. So meet me at the pharmacy. This is
Yeah.
more specific because that one is dealing with the issue. Whilst others are saying, oh, how are you? Normal routine response, I'm fine.
Yeah.
So that is that. So I'm done with the difference between the IFRSs and
The
the
conception.
conceptual framework. The IFRSs,
So
you
are
need
you
to take.
saying that the IFRS was born out of the conceptual framework?
Thank you. All the
But
IFRSs.
if it was born out of it, there should not be any inconsistency.
Good. So, but we have given a clause that in event of any inconsistency,
Also,
we don't expect any inconsistency, but in event of inconsistency, whatever this one is fine now.
Okay.
Now,
I'm here.
the next one has to do with we are done with this, so we have to go through the purpose. Why do you think conceptual framework came to be? Purpose? Conceptual framework. Up whatever we are learning first, getting to the exam time, you won't forget about it too.
What do you say?
Up, you know, I hope whatever you are learning first, no, that you understand it. Getting to the exams, you intentionally forget about it too.
No, me, I'm even writing it down, so I don't forget. I'll be reading it.
Good, because it will come for compulsory
Yes.
theory, right? Let pass you, no calculator.
Mhm.
But most often, by the time we are doing the last chapter, the first chapter student, they are gone. People they forget about it, because they told their target. I have to delete what I've learned earlier before I can put in new ones. So that's what some people they do, but it's not the best. All right, so the purpose is also known as advantages, good news, importance of this conceptual framework.
Okay.
Now you can say that conceptual framework assists the purpose one. But you can say that to assess the owner, who is the owner?
To assist the owner.
Yes, to assess the board, IASB. Two, one, to develop IFRSs.
Okay.
Yeah,
I
so
agree.
to develop IFRSs or even updating existing ones, not like new IFRSs. They can also use it to update an existing IFRS. Oh, no. The next one has to do with again to assist the same board, promote the use of the IFRSs. To promote the use of the IFRSs. But everybody wants their number to increase, true or false?
True.
They say that even ghosts want to be multiplied. Yes. My old village grandma told me something that anytime they said that anytime they give birth, the ghost the ghost people they are crying, but they've lost a
What?
member. And anytime somebody also die on earth, we also cry because we also lost a member. They are also happy.
Because they received.
Yeah, they receive a soul. So long that's how they say they are doing it. So the same thing applies to the IFRSs. You see, these IFRSs, the owner's dream is that you sleep and wake up one day, the whole world, everybody is using IFRSs.
Yeah.
And they'll be very happy. Very happy. I have a product that maybe in the near future, when I start the product engineering, that I'm planning that the whole world will be using it.
Hmm.
And my target population is 7 billion usage every single month. It's much more than social media.
Mm-hmm.
Yes. So how do I promote the use of it? How do I promote the use of it? So I'll bring a concept that will assist me in promoting people to use it. So it means that I'll make sure that all my assumptions and concepts are so clear. So one thing about the conceptual framework is that the principles are so clear, and the principle also remove what you call
Ambiguity.
subjectivity,
Okay.
and it's moving towards what you call uniformity or objectivity. You see, one accounting transaction, call 500 accountants, they all give you different treatment, and all of them are right. Why is it supposed to be like that?
So you're
Why can't
saying
we?
the importance of the conceptual framework is to give is to remove subjectivity and
Yeah,
move towards objective.
it remove subjectivity and makes the principles more objective, and hence it promote the use of the IFRS. So it make the IFRS more objective than what subjective. You get it?
Yeah.
Because if you leave the thing subjective, it's no good. Oh. That is
Yeah.
what leads to the manipulation of an account. Because the
Yeah.
thing was left open. So everybody's doing what he feel like is right. We're supposed not to be like that.
Okay.
You shouldn't have room to determine what you feel like is right. No. There should be objective. Then you put it there and then you are good to go. So that is one thing. So if there's a principle that focus more of objectivity instead of subjectivity, then people will use it, right?
Yeah.
So that is it. Number two, to assist the following. So the conceptual framework also help the following. These people, they are four in number. One, preparers. Who are preparers? Two, users. Who are users? Three, auditors. Who are auditors? Lastly, standard setting bodies. So how would the conceptual framework help the preparers? Who are the preparers? First question, who are the preparers?
Those who prepare the financial statement.
So how would the conceptual framework help them?
Um. Hmm. Um. It will serve as a guide in the preparation of the financial statement.
Okay. Yeah, so I think that. So I can. So if you're preparing financials to get stuck, means you need to revisit your basics,
What do you say?
and then we are done.
What
If you
did
are
you say?
preparing financial statement and you get stuck,
You need to,
if you are
yeah.
prepar- if you are preparing financial statement and you get stuck, you have to stop and revisit your basics, and the basics are the conceptual framework.
Mm-hmm.
So that's why it is. Then the users. How the conceptual framework help users?
Um, it prevents ambiguity. Helps them to understand
Take
the.
the your second point rather. The conceptual framework assess the users to interpret the financial statement
Okay.
for interpretation, for analyzing.
Okay.
What about the auditors? Who are auditors? Police without uniform. All right. Auditors, who are they? Police without uniform.
Yeah.
You see, auditors work according to, so they are in to check and ensure that the rules has been followed.
Yeah.
All right, so auditors, what they come around, they are only come to confirm that the writing has been done.
Yes.
So how did they know that you've done it right? They compare what you've done to the law.
Yes.
If you go with the law, you've done it right, they are done.
So, can you say that it helps auditors to assess the quality of the financial statement that has been prepared?
Can
Hello?
you come again? Can you come again?
I said that. Can you say that it helps auditors to assess the quality of the financial statements that has been prepared? Hello?
Yes, please. Can you come again?
I said, can you say that it helps auditors assess the consistency? Sorry.
Okay.
It helps auditors assess the quality of the financial statement that has been prepared.
So we can say that yes, I think that it helps the auditors to determine, to form the audit opinion.
Mhm.
Assist auditors to form or determine the audit opinion. What is the audit opinion here? What is audit opinion here? Audit opinion is your conclusion on the audit. And here, if there's no law, is there any crime?
No, if there's no law, there's no crime.
So auditors compare what you've done to the law, and what is that the conceptual framework is not a law. That's what the auditors use to check whether that it's in law or not.
Mm.
Then the standard setting bodies. I call them the copiatos. You see,
Mhm.
before IASB came, every country used to set their own standards.
So Are the various countries mandated to follow the IASB standards? IASBs.
Or Canada not even follow them, but I don't know why the English-speaking countries they copy everything inside. They copy
Mm.
everything inside the IASB. Like Ghana #1. That's why I call them copier too.
Mhm.
Standard setting bodies, and most of them have dissolved their standard setting bodies because they are resorting to the international one, the IFRS. For example, Ghana we adopted the IFRS in 2007. And became fully operational 2008. ICS started exam until 2009. And all that Ghana GAP, we used to have what's called Ghana GAP, generally accepted accounting principles. And all of them were gone. All the people who were setting it, they are all gone. The board has been dissolved long ago.
Oh, okay.
And so basically, that's our the standard setting. But let's go to the disadvantages. The limitations
Okay.
of the conceptual framework. What are the limits? What are the bad news? All right, so limitation #1. You see, have you seen the users?
Have I seen what?
The users of accounting information. Mention three of them. Let me see.
Users of accounting.
Yes, users of accounting information. #1, since it does not provide a specific need of the user.
It does not what?
It does not provide specific needs of the user.
Oh, okay. That's the disadvantage.
Yes, please. So it's because there are numerous users. You see, my grandfather in the cocoa farm,
Mm-hmm.
where we used to have some grandfather years, it's no more. This grandfather that was having plenty cocoa farm. Imagine he he sell the cocoa and get money and said, okay, target, go and buy shares in GCB for me. And now GCB prepared the financials, and you're saying this grandpa, she used the conceptual framework to understand. Do you think it will be possible?
No.
Will it increase the number of cocoa trees or the yield? You will not even buy your idea. So the limit is that it's not everyone. There are so many users. So how then do you tell me one thing that will be of good interest to all of them?
So he said it does not provide a specific need.
Need of a user
Mm-hmm.
is instead it provides general means.
Okay. Okay.
So that is it. Why? Due to the various or varieties of the users.
Okay.
#2 is It's limited to complex transactions or unique transactions.
If that is limited, can you explain?
It's limited to um
If that is limited to
it's limited to complex or unique transactions.
mm-hmm.
That's it. Number two, okay, that's the second one. Complex
Mm-hmm.
transactions. Number three, is it the this conceptual framework? It only guides what they think it exists in.
It only guides what they think exists.
Thank you. All right, so basically that is it. Now, let me give you a practical example. You see that if in typical African home, Ghanaian home,
Mm-hmm.
who washes the bowl after we finish it?
Mm-hmm. Mm-hmm.
In a typical Ghanaian, who washes the bowl? Where there's no maid.
The woman.
No,
Oh, the child.
and the children.
Mm.
You wash the bowl. In fact, you wash the bowl, especially the bowl that you have eaten inside.
Yes.
My grandma in Accra here will tell you that if you don't want trouble, if you don't wash the bowl and you don't wash your hand, grandma will not do anything to you. If you eat with your hand, you don't wash your hand, you don't wash the bowl, grandma will not do anything. But what do you wash the bowl, you wash your hand and leave the bowl. Grandma will find a way that you put the bowl inside your bag, your nicest bag, the bowl will be inside. Unwashed. So imagine these are the principal in the house, and one day one of your children is very, very unwell, sick to the extent that you are even begging them. African mother will only beg you to eat when you're not feeling well.
Mm-hmm. Mm-hmm.
If you are strong, will not beg you to eat. Me like this. If I'm not feeling well, you give me any food. I say let them put inside the fridge. When I recover, I recover. So I always point my hand at the fridge. You can put it there. Else I'll not recover. I worry you. So imagine the guy is not feeling well to the extent that you're the one that fed the guy. You expect him to go and wash the bowl,
No.
but that's the rule in the house. Why are you breaking your own rule that every child, when you finish it, you have to wash? Because the case is what? The case is different. The case is complex. The situation is complex. That is why. So the normal rule, normal law won't happen when the case is complex or when the case is. That's all. I don't know if you remember 2020 election. What happened? Yeah, 2020 election. In the parliament, NDC and NPP had a number of votes, parliamentarians, right?
Mm-hmm.
In that case, we don't know who should be the majority, who should be the minority.
True.
So, and the reason is that the constitution never said that. Because the constitution also captured things that the lawyers think it exists. They've never foretold that we can even have a tide observation. In that case, it was a complex situation, so we have to step in and do it. So that's all what you say by the limitations of the conceptual framework, the challenges we have with it. These are the few challenges we have with the conceptual framework.
Target, you are sleepy.
Me
too, I'm sleepy.
Let me do last slide.
Let's continue.
We have the content of the conceptual framework. So far, so good. Whatever we have learned here, we've not learned anything because we said the conceptual framework is a principles, right?
Yeah.
Now, so far, we've only learned the definition.
Yes.
We've only learned the importance, who brought it, and then the disadvantages. We are now going to learn the actual principles. How
The
we are
actual
thinking.
principles. Okay.
Number one, the principles are 7 in number. The first one is called Objective of Financial Reporting. Objective of Financial Reporting. Why do you think we prepare financial statement? Any reason?
Oh, for decision making.
Okay, but why is a Makola woman doesn't prepare financial, but she also take decision? Or why? There's a particular reason why we prepare financials. Single. Because if you claim we are learning how to prepare financial statement, then we should start from the purpose first.
Yes.
So why do we prepare financials?
We prepare financials because but decision making is part of. Okay, so apart from decision making,
You have added it to
pardon?
You have added it to
Okay, so we prepare financial statements for the, let's say, stakeholders to know the financial performance of a company or an institution.
I love that. So you are saying that we prepare financial statement to financial reporting to know the performance, right? To assess the performance. Again, Makola woman doesn't prepare financial, but she can tell you her performance. She can even tell you since the one she started. My grandmother that is in the village, those days when she go to the market from Techima, when she come home, what she does was that she would tie a polythene bag with money inside black and ask me to go and put it down under the bed. There's a basket to be there. She go and put it inside. Then I should add 1 stone to it. So 1 black polythene, 1 stone. No recording, but she can tell you how much she has made. There's a particular rationale behind this, all this financial report.
Accountability.
Yes, accountability. The Makola woman doesn't prepare, but she's accountable, right?
Okay, so what's the main reason?
But if I say, can you tell me that you said it already? Let me see.
So say it and let me see that I've said it already.
There are 2 things. Ownership and management of financial of a company, are they in two hands? Are they in the same hand? Owner is the same person managing the company. Is that so?
Sometimes no.
Most often, no.
Most often no.
Where properly, the answer is no.
Yes.
Only in a small company coming. Like
Yeah.
for example, Target Agro World, Target, Worker, everything, Pioneer. Oh. So here, if the owner and the manager or the management are in different hands, they are different. What do? Then management should provide information to the owners and other stakeholders in order to take their decisions. So the aim is to provide information. Do you get it?
Yes.
So to provide information. Then the question is that what type of information specifically are we aiming to provide? Do you get it?
Yes.
So that is where all what you said will come in. One, you provide information about one about performance that is measured in terms of profit or loss. Two, information about changes in equity. Three, cash move or cash flow. Then four, financial position, aka balance sheet. So these are the main reasons why you prepare financial statement.
Yeah.
All right, so now you understand why we prepare financials, right?
Yes.
So to get information. What we've learned is called accounting reason, accounting purpose. Do you get it?
Yes.
We can enter into, let's say, I'm done. Now we mentioned two things in account. We mentioned users. Who are the users of accounting information?
You said who are the internal, external users?
Good. So
So
that is
investors, even regulatory bodies, management, board.
yes.
Yeah.
So that is that. So these are the main reason why we are not part of the board.
Is that these are the reasons why what?
These are the purpose for which financial statements are being prepared.
Yeah.
All right, so that's all. Now we also mentioned the accounting principles.
Yes.
All right, so I'm done the intro. So how many times do you think we should prepare financial statements in a year? How many times?
I know the normal thing is one. Financial statements preparation. Minimum of one.
Okay. Maximum of
Maximum of 4 every quarter. Or
okay. So you the law says at least one. So somebody can do twice, 3, 9, 10, 11.
and that's why I said minimum of one.
That's correct. But when I say are you sure, you change your answer.
I didn't change my answer. You said maximum of what? Then I said 4. But I said minimum.
Okay, so that is it. And then we also have that the legal objective. That one is also known as 26 cities.
He said is also no. He said the legal what?
Legal objective of financial report.
It's under the principles.
Can you come again?
You said the legal objective.
Legal objective of financial reporting is to fulfill legal requirement, right? To require by law
Yeah.
that everyone should publish financial. You alone say you income.
Mhm.
All right, so basically that is it. So I'm done with the first content. The
About
content.
but did we talk about the principles? Or we are yet to?
The first principle is what we've done. Why you should prepare financial statement. It's the first
That's
principle.
that's objective of financial reporting.
Yes, please.
Okay.
Can you go to the chapter 2
Yes.
of two? The second principle says underline assumption.
Okay.
The number 2 is called underlining assumption.
Okay.
There are so many accounting principles, but only one pair with underline it. That this should be the main one.
Okay. Okay, I'm listening.
Underlying assumption, there are so many, but the underlying assumption is called going concern.
Yeah.
It is all financial statement must be prepared under going concern basis.
Yeah.
Now, what's the meaning of going concern?
That the going concern basis means that the company um the company will still be in existence even after 1 year. Target, are you there?
Yes, please, I'm fully here. So the going concern simple says that we assume it's an assumption that
Mhm.
the entity will continue to be in operational existence for the foreseeable future,
Uh
at least once a year.
mm, it assumes that the entity will continue to operate.
Yes, please. At least 12 months after the last balance sheet date. At least 12 months after the last balance sheet date.
Okay.
All right, so no question. This is the second principle.
Mm,
So because of this principle, it says that all closing inventory should be carried forward. That's why we call it balance BD.
balance brought forward.
Yes.
It says that all. What did you just say, please?
Just say that going concern because of going concern,
Mm-hmm.
every account have debit and credit, two of us.
Yes. They said all balance must be carried forward. Target.
Yes, please.
It said balances should be carried forward.
Yes, because of going concern, you balance all closing balances should be carried forward.
Okay. Target, are you sleeping?
Yeah.
Pardon?
Today.
Target, are you sleeping?
Not really.
Not really, quite. You're quite sleepy.
Yes, quite because I traveled. I came back yesterday. And I okay, so I'm alive. So because of going concern, all balances should be carried forward. We call it balance carry forward or carry down.
Mm-hmm.
So if you know that the next 12 months you won't survive it, never use balance carry down. So in accounting, balance carry down is only used for companies that they will not collapse at least 12 months. Do you get
Yeah.
it?
Yeah.
Go. So that's the meaning of the application of the going concern. Then open balances too, she also brought forward. Brought down also. And that's it. So that's all. Now there's other the opposite of going concern, which is the if you know that your going concern is in doubt, which one do you use? Clearly, like for the savings and loan companies, that they know that the alliance is known, they have revoked it.
Okay, so I'm taking that's my red attitude medicine.
Come again.
No, telling you that. I just remembered I'm just taking medicine.
For taking medicine.
We can go on. We can go on.
So if you realize that your future is uncertain as a company, what will you do? That when we say don't use going concern as them, use what we call breakup basis.
What?
You use breakup basis. Break
Oh,
up.
okay. Didn't I've never I know going concern, but I've never heard of breakup.
Yeah, that breakup basis. That one you don't use going concern. That one, no balance carry down. Nobody. Why are you carrying it down? Nobody will live to see it tomorrow. So if you know your going concern is in doubt, we apply breakup basis. And most of the financial statements you see are ongoing concern. That's why.
Yeah.
But I don't know, they use going concern and then it will collapse after 3 days. That is if you know that your company won't survive the next 12 months, never use going concern, use breakup. And then that's all. Then there's another there's another concept called accrual basis. What is accrual basis? Accrual. It says that transactions should be recorded as and when they occur, but not when cash is paid or received.
Okay.
Transaction must be recorded as and when they occur. So that's the accrual. So accrual, as long as the transaction took place, you must record it, not when cash comes in. So the accrual, you can make a sale. Let's assume that we made a sale, but the sale wasn't received in this period, this year. The sale will be received next year. So where can we record the sales? It must be recorded next year. Do you agree?
Yeah, so it'll be your receivable.
Good. Under the accrual basis, it will be recorded this year because the sales took place now.
Yeah,
But there's another concept called cash sales. Sorry, the cash basis. That one they don't also recognize receivables and payables.
Okay.
So automatically you are right. It must be part of receivable. And then that is all. So I'm done with the underlying assumption. Now you've learned the other ones too, you've learned the main ones too. And then that is all.
Wait, target. So the principles. The first one is the objective of financial reporting.
Yes, please.
The second one is underlying assumption.
Yes, please.
That's a going concern.
Yes, please.
The
So
breakup basis
is the other opposite of the underlying assumption. So if you are not
is it part of the underlying assumption?
Okay, so the word underline means that among all the principles, this is the one that we have selected, we have chosen that it should be the fundamental for all financial reporting.
Yes,
But in
I
the event where
get it,
that one, so it's like extension. In the event where the main one does not apply, an
then you need the
alternative that
breakup basis.
thank you.
And what about the accrual basis?
It's part of the going concern. It's in. Why? Because if you know that you don't live to see tomorrow, you sell and give credit up to tomorrow.
No.
Good. So out of the belly of the going concern flows accrual basis.
So it means so far the principles we've mentioned just two.
Okay, yes, I've mentioned going concern, for which the opposite is the breakout basis. The one I finished, I also mentioned accrual. The opposite is the same as cash basis. That's all. I've mentioned four, but they can be grouped into two.
Oh, okay. Okay.
All right, so that is all. Now, principle number 3 is qualitative characteristics. Everything comes.
It's targets. You are confusing me. You said you've mentioned 4, but now you're saying principle number 3.
Okay, so let me list them here. Where's my writing pen? Now, I've mentioned 4, meaning I'm not saying I've mentioned 4 principles. So I've mentioned 4 assumptions under the number 2. You say assumptions, right? The main one is going to concern true or false.
Yes.
The above going concern, we have the other ones, the alternatives.
Breakup.
Breakup, these are
basis,
breakup.
accrual, and cash.
Thank you. How many do you have so far?
So they are all under the underlying assumption.
All of them are underlying assumption. They are not on their own.
Okay.
Then number 3 is qualitative characteristics. Principle number 3. Qualitative characteristics. That is the qualities of a good financial statement.
Okay.
All right, so we are saying that the financial statement must possess certain qualities, certain attributes, certain unique features that will make it, yes, indeed, the financial statement.
Okay. Okay.
So that is the principle number 3, underlying assumptions. Assumptions. Qualitative or quali qualitative characteristics of financial statement. Meaning the financial statement possess certain quality, certain attribute that will make it good. Okay, so that's the quantitative characteristics of financial statements. Right after they will do the element, then we are done for real.
So what are some of the attributes of
The
a good
attributes,
financial?
we have grouped them into 2.
Okay.
First, but you call them fundamental qualitative characteristics. Fundamental. Where in this country, we're told that if your fundamentals are wrong,
Hmm.
the exchange rate will expose you. Later on, it now became if the fundamentals are wrong, the exchange rate will expose the owner of the quotation. That was my version of it. So, fundamental qualitative characteristics. This set deals with any quality that makes the financial statement useful. That's all. So, what quality that you say, this thing, if you should have added this to it and you make it more useful, to be more useful, So, it means that whatever qualities that makes the financial statement useful is called fundamental.
Okay.
There are two of them. One is faithful representation.
One faithful presentation.
Yes, faithful representation.
Okay.
Faithful representation.
And the second one.
Relevant. So you are down in this group.
Is that the
The
first?
first one is called faithful representation.
Okay.
Then the second one is called, all of them are under fundamental qualitative characteristics, right?
Yes.
Then the second set, we call them enhancing.
Enhancing.
Enhancing qualitative. How is that one different from the fundamental qualitative?
Wait. Again.
Mm-hmm.
So we said the qualitative characteristics. We have one called the fundamental qualitative characteristics. That's any quality that makes the financial statement useful.
No. Fundamental simple means these are qualities that make the financial statement more useful. You get it?
Yeah.
The quality itself make the financial statement useful.
Then, so the faithful representation, is it under the fundamental qualitative?
Thank you. Faithful is under. Under the fundamental, there are only two.
So the faithful representation and which other one?
And relevant.
Relevance.
Yes, please.
Oh, okay.
It should be important. It should be relevant to the situation at hand.
It should be relevant to
The transaction or the financial statement should be able to make and that's the meaning of the word relevant. It should make a difference. It should be able to make a difference or influence the decision it's.
Okay.
Great. Then enhancing, there are four. One, comparability.
So enhancing is the second one.
Yes, please.
Okay.
Two, understandability.
Hey, please wait. So enhancing.
Enhancing is the next group. Is like the first one is comparability, right?
The first one is what?
Comparability.
Oh, comparability.
Comparable. The second one is verifiability. Verifiable.
Okay.
The third one will be, unfortunately, the third one will come with the word verifiability.
You said the second one was verifiability.
No, the second one is understandability.
That's not what you said.
Okay, so then
Okay.
yeah, it's true. I made mention verifiability. I rather wrote understandability. So you are right.
So comparability, understandability, verifiability, and the fourth one is
Verifiability, all the ET. The fourth one is timeliness. Timeliness.
mm,
So so you should be able to know how to explain this. Unfortunately, for this is how far the good Lord will bring us. So I'm ending
yes.
on this. My next meeting, you are the one to do the presentation. You tell me all the fundamentals and then the enhancer. Then I know that we have to
Okay. So that's the homework. Explaining
each one with practical scenario
the
as
f-
much as
explaining the fundamental,
and the
qualitative,
enhancement
and the
quality. Yes, qualitative analysis. The practical example. Not just information that
Mhm. The next class is Thursday evening. Oh.
right. Well, we're not meeting. Correct.
Do you want us to meet?
Hmm. Done. After this week, girl, next week I'll be meeting you almost every time. Anytime
Okay.
I'm free. Anytime you also free, let me know. Anytime I'm also
Okay.
free, I'll let you know then.
Okay. So
Good.
we'll meet on Thursday. We'll do the strategy on
Yes,
Thursday.
please.
Are we?
Yes,
What's our
please.
Friday?
Friday, we are meeting at dawn.
Hey, but if I do Thursday evening and Friday dawn, it'll be too much. Oh.
Okay, so that is why I took off the Thursday dawn to Tuesday dawn. I don't sorry. I took off
No, so do you know
the
what?
no.
Today we're supposed to do morning, but if we do morning, then I come and do evening too. Okay, I can do the morning. Just that
You tired.
yesterday I didn't sleep, and that's why today at 4 I said that I needed to sleep because it affects me when I go to work. The last time that we did the dawn,
It affected you, right?
eh,
Oh, then let's do the evening. No, let's do
yeah, I
evening.
prefer the evenings
Let's do evening. Evening,
than the
evening,
Sunday.
evening. Then we can do Thursday evening. Thursday evening, where will I be? Okay, good. Thursday
Thursday
evening, I'll be
evening
at
is
West.
part. Oh, it's already part.
Oh, okay. No problem. So Thursday evening, I'll see you.
Yeah.
Then we do the rest for the
But
week.
tomorrow during the day, will you be free?
Tomorrow, I'll be out of Accra. I'll be at Sawam.
Oh, okay. Okay. All right. I
All right.
mean,
So,
sometimes too, I work, some of the days I work, maybe I can use my lunch time. That's if you.
yes, so, read this week. After this week, I'm ending my reports and then I want to go and hide at my factory there at Central. My, s-
Oh,
my
okay.
system my systems will be working, so we can anytime you want us to have a class, you just have to come to me. You give me
Okay.
notification. I'll
Yeah,
rush.
because we can do some afternoons. I'll find.
Yes, I'm all you use me or media. I'm there. Use me well.
Oh, I will.
You're not even using me, and I'm worried.
No, I haven't been well. That's why, but don't worry.
Oh,
And oh, this morning there, I didn't sleep well last night. That's why I canceled this morning.
no problem. Look, it even
Yeah.
helped me. Myself, I was even tired much more than you. You saw when I replied the message.
I didn't even check the time you play.
When
Mm,
Chaco,
okay.
Akosumu in Samuel. So by the time I return back, I,
Ah,
I
okay. So God willing, Thursday.
yes, please.
Yeah. Okay. Have a good night.
Good night.
Mm.
Bye.